Hello friends. In this video, we'll talk about quarter 3 results of Reliance Industries. Revenue from operations rose by 4% to 2.39 lakh crores from 2.31 lakh crores. EBITDA was up by 12% to 43,789 against Bloomberg estimate of 41,000. EBITDA margin rose to 18.2% from 16.9 against Bloomberg estimate of 17.2. Uh, we can say that revenue failed to beat the estimates, but EBITDA did because of improvement in margins, and somewhere Street also anticipated it. So stock price went up by 1.31% against climb of 0.42% for overall Sensex. If we talk about segment-wise breakdown, then OTC revenue was down by 4%. Oil and gas revenue was up by 2%. Retail revenue was up by 18%. We saw that in case of DMart also, revenue was up by around 17-18% only. So this is as per the standard. Digital revenue was up by 4% and other revenue was up by 5%. So retail is something which has done well, whereas OTC has not been able to increase its revenue compared to last quarter, same year. Talking about its market cap, then it's the biggest company in India market cap wise. It has a market cap of around 17 lakh crores and has a PE of 25. PE is less for the company since it's a conglomerate and all the businesses are clubbed together into single stock. If they had been broken down as per their businesses, then we could have seen retail is something which might have gotten better PE, so as the Reliance Jio. Oil and gas is something which generally has very low PE. We could see companies like ONGC, Indian Oil are the ones which trades even in single digit PE. So this is something which we need to consider. ROE, ROC numbers are less because of, like we discussed, involvement of oil and gas business also into the overall Reliance group. Uh, Dividend yield is decent with 0.4%. Uh, Talking about its valuations vis-a-vis historical average, then stock is currently trading at a P which is near to its long-term average of 26.4. We can see there has been a tapering down of profit growth, and we see this trend is being observed across industries. There was a sudden jump in profitability for companies after COVID because of pent-up demand, because of the overall situation of the economy. However, now almost all the companies have started showing lower profit growth compared to what it was 2 years back, and that in fact is getting reflected in stock price as well. We have seen recent corrections mainly because of the mm, miss in terms of Q3 profits across segments. So that is something which needs to be noted. Talking about its growth rate, then 5 year sales CAGR is 10% and profit CAGR is 12%. So company is delivering decent growth. It's not very high, and as we already discussed, it's biggest company market cap wise in India. So naturally, it will struggle to grow at a very high pace. But company's growth is consistent. It has constantly improved its sales and profit number overall over the period of time. So, if someone wants to be defensive and invest in stocks which will not fluctuate much, but will also ensure steady returns, then this is something which definitely should be on investors' radar. Talking about its technicals, then current trading price it's around 1,273. It is near its trend line support. It did take support near this trend line several times in the past. It has another important level of 1353. It did take resistance near this level in the past. We'll have to see how the stock trades coming going forward. If it breaks up, then we can expect it to go up and can test 1500 and 1700 levels, uh, but it needs to break out with high volumes. Uh, Remember, friends, this analysis is only for the educational purpose. Kindly do not consider it as a stock buy or sell recommendation. Kindly consult your investment advisors before taking any call. Thank you.